So first one, that's a potential Q1 buy. And remember, these can change around as the year goes along, if stock go up big or down big or things like that, right? But Q1 is a potential buy, is actually Nvidia, right? Now, I know Nvidia, it looks so high, right? It's $492. It's had a tremendous year. And people are like, oh, the stock's overvalued. It's a ripoff. It's crazy to buy it now. I mean, this is just no way. It's not the right way of understanding investing, right? I mean, pretty much every single time I ever look at a real estate property in any great city, I could say it looks like a bad time because the price is almost always higher, year after year after year after year after year after year, decade after decade after decade, right? And all along, it was a great time to be a buyer of real estate. I mean, gosh, look at a property in Los Angeles in the past, 50, 60, 70 years, every single decade, you could have said, this is a horrible time to buy. It's so expensive now. And it just gets more expensive over time, right? Nvidia is a great example of just a great piece of real estate. I mean, this is a company that it's up 1,376% in the past 5 years. It's done tremendous, right? And like I said, a lot of people look at this stock and they say, 1,376% in the past 5 years, it has to go down huge. It's way overvalued, right? Well, what if I pulled this up for you? This stock's up all time, 124,393%, okay? So these gains you've gotten over the past 5 years are actually very small potatoes compared to the gains you've gotten all time in regards to the stock, right? And great companies perform tremendous over 5, 10, 15, 20-year time frames, right? I mean, companies that are A-plus companies, they put together gains that you never thought possible, and you're like, wow, this stock's really trading at this price, right? And I mean, you could have said when the stock was up 50,000%, oh, that's crazy. Or 10,000%, that's crazy. It can't go any higher. It has nothing to do with it. It's all about the business model and the earnings underneath that business model. And when we look at that, we start to find some intriguing things. Because here's something you'll find with Nvidia that you won't be able to find in probably any other public company in the world, to be honest, okay? This is a company that's trading at under 25 forward P. Under 25 forward P. And yet the revenue is expected to go up over 50% next year. Over 50%. So this is a very, very, very compelling stock. When I can find a stock that's trading at a forward P under 25 and a growth rate of 50% plus expected for next year, I like that. Because you're not going to really find that anywhere. Now, if we look at Nvidia over time, right? I call this a sleep well at night beast company. Because every single time you ever think Nvidia's best growth days are behind it or the bear case comes out, Jensen and the team, they find the next angle of growth and the next angle of growth. And I would almost guarantee you Nvidia is working on the next angle of growth right now. And we're going to see it in 3 years from now, 5 years from now, 7 years from now. And then we'll understand it like, wow, they found it again, right? But that's all this company's done over time. And so it'll go through some unbelievable major growth periods and then a big kind of downward move. And then a big growth area and then a downward move. Big growth area, downward move. And then it'll go on a next multi-year massive growth trajectory. And then all of a sudden, the company will slow down and everybody will claim it's doomed and it's all done and stock will be a huge buying opportunity again. But that's Nvidia stock over the years. That's the story of Nvidia, right? Now, the great thing for Nvidia is they actually only have one major competitive threat. In my personal opinion, they're AMD, and that's it. And the great thing for them in regards to AMD is AMD's pretty much always behind Nvidia. Nvidia's always usually from what I've seen throughout the last decade, is Nvidia's usually 1 to 3 years in front of AMD on almost everything. It's pretty impressive, actually, right? And AMD's a very impressive company with what Lisa Su's put together there, but nonetheless, they're always behind Nvidia, and they're behind in AI as well, which is why, AMD, look at their AI-related revenues this year, look at Nvidia, it's a whole different ballpark, right? And the other great thing is, at the end of the day, there's plenty of growth for both these companies. People think it's one company gets it all, and that's one-sum game. No, AMD can prosper, Nvidia can prosper. Look at the last decade. Look at AMD's stock price the last 10 years. Look at Nvidia's stock price the last 10 years. Look at AMD's net income the past 10 years. Look at Nvidia's net income the past 10 years. Revenues, everything. Both companies can prosper. There's plenty to go around with how big these massive markets are, right? Now, the other thing with Nvidia is they're starting to stack cash like it's nobody's business. They're already up to over $18 billion in cash equivalents, and marketable securities. The money's going to continue to pile up because this company's starting to bring in so much net income. It's ridiculous, right? Now, they're down to about $8.4 billion in long-term debt from $9.7 billion at the beginning of this year. I don't know what their plan is with debt, but I could see a situation where they pay all their debt off in 2024 and bring that number down to zero. I don't know if they'll do it. They might not. But I could see, if you look at how much Nvidia is going to be raking in quarter after quarter in terms of net income for this company throughout the year, this is like pennies for them. They could pay that off and then be debt-free and literally be just a debt-free company, just stacking cash, debt-free, almost like Apple way back in the day, back in the Steve Jobs days when they were stacking cash before they started to issue all the debt and things like that, right? That's incredible. Now, here's the other great thing, right? They got this H200 that's coming out. And this is going to be the next big chip for Nvidia. And these are going to be sold probably for $40,000 to $50,000 per chip. That's per chip, okay, per H200. The H100s have supposedly been selling between $25,000 and $40,000 for the company, right? So the great news for them in regards to this new chip is I almost look at it like, every year Apple comes out with a new iPhone and, a certain amount of people go buy the newest iPhone every single year, right? And if you're a company, you're a big dog company, you've got to keep getting the new Nvidia chips. If they come out with one every year, every other year, you've got to kind of it's keeping up with the Joneses, right? And this happens in the corporate world. Like if one company doesn't want the highest tech chips, they're going to fall behind the other company, right? And even if they don't fall behind, there's at least a perceived fall behind, right? Because the H200 is much more powerful than the H100. And guess what? The H300 is going to be much more powerful than the H200. So Nvidia kind of gets these customers kind of locked in where they honestly have to keep upgrading and upgrading and upgrading and upgrading. They're going to fall behind. And once again, whether that's real or perceived, it is what it is. So if you're a big dog company, you're going to have to buy all the H200s you can get your hands on. And then you're going to have to buy all the H300s you can get your hands on, right? And it just keeps going and going and going. So that's the beautiful thing with NVIDIA's business model overall. And so I look at NVIDIA and I really, really like what I see with this company. And so at the end of the day, this could easily be a stock I start buying in the first quarter of the year. We'll see what happens. But yeah, man, pretty exciting one in regards to NVIDIA. And I know all the growth, but in terms of the stock price, at the end of the day, it could be very well that NVIDIA is a far cheaper stock today than it was a year ago or 2 years ago. You might say, well, how's that possible? Look at NVIDIA's growth rates a year ago. Look at NVIDIA growth rates now. Look at NVIDIA growth rates expected for next year versus what they were at this time last year. Night and day difference, okay? All right, first one up here is NVIDIA is the best of the best. I want to listen to what this analyst has to say about NVIDIA stock. All right, guys, let's get into this.
NVIDIA, joining me with where he's finding opportunities now is veteran tech investor Paul Meeks, currently a finance professor at the Citadel. My middle school friends are laughing, Paul, because I called it the Citadel when I first moved south. So anyway, glad to be able to redeem myself. Welcome.
Great to see you.
So
Thanks for having me.
What would your thoughts be about Apple as a stock right now?
Yeah, I don't think Apple is a viable security present. Right now it's trading for about 5 or 6 times what Wall Street is expecting for its long-term or secular growth rate. And yes, it's a great company. Does it deserve to be a $3 trillion market cap going to $4 trillion? I think going forward is going to be tougher and tougher to achieve those gains. We know the company has shrank revenues every quarter for the past 4, might even unfortunately do the same thing this quarter. And so I don't see the upside, particularly after the stock has done so well in recent memory. So among the Magnificent Seven, among the mega cap tech stocks, it's not on my list.
Very interesting, as its market cap sits right on $3 trillion today. You do like a couple of the other ones, though. Alphabet, for instance, Amazon, Microsoft. I see a lot of them up here. Meta as well.
Ooh. Yeah, so I like among the Magnificent Seven. My favorite idea is Nvidia, and I know it sounds a bit cavalier to say and not particularly creative, but here's a company, again, we talk about the PEG ratio, PE to growth, like I just mentioned for Apple. Next year, the company should probably grow its revenue and earnings per share at about 70%. And its PE ratio is not even 30 times. It's actually not that much higher.
No, technically the forward P is lower than Apple's forward P. Let that sink in for a moment, okay? In Apple, we don't even know if their stock's going to get growth. Even if it does, it's going to be a small amount, right? NVIDIA was almost a guarantee that it gets massive growth. So,
that's the S&P 500. that'll be lucky to grow its EPS next year at 5 to 10%. So Nvidia is my best of the best. But because I don't see a recession in this country, and I do think that digital advertising will remain robust, I do like Alphabet, and I do like Meta. And as my number two after number one Nvidia AI plays, I do like Microsoft. It's come a long way, but it does have a little bit of more upside, in my opinion.
I see Micron on this list as well. I did get a question from a viewer, Paul, about Intel, which is about doubled this year, if I'm not mistaken. Wondering if that's a name you could bet on for next year. I don't know if you're, consider yourself a chip analyst per se, but what would you say about Intel's prospects?
Oh, I know the company very well. I think under Pat Gelsinger, the company is better managed. It remains to be seen if their entree into outsourced manufacturing is as wonderful as the bulls claim it's going to be. I do think that they will have a little bit of bounce back in the PC business next year, which still drives Intel, because PCs should have a unit ramp next year after having a couple miserable years. But right now, that stock is very expensive based on what I see is its long-term growth, both top and bottom line, of probably 5 to 10% best.
Fair.
So I would not buy it now. If I held it, maybe I'd hold it a bit longer, but I think that stock is expensive.
That's fair. That's fair. No disagreements there. Next one up here, we're entering a 3 to 5 year tech bull market, says Gene Munster.
Investors are wondering if it will continue into the new year. Joining us now is Gene Munster, Deepwater Asset Management Managing Partner, to offer a few thoughts on that. Gene, good to see you. I guess we have to separate out what we're talking about when we describe tech. You have the Magnificent Seven, these anointed companies. They were up a lot. There was AI working, but also they were defensive and they were considered to be very insulated from a lot of the macro shocks. Then you have the rest of tech. Speculative tech peaked almost 3 years ago, early 2021. So what looks interesting to you going into 2024?
Mike, maybe just for starters, is I think we're entering a 3 to 5 year tech bull market. This is powered by AI. This is not about interest rates. This is about a fundamental shift in productivity. And I think we are going to be in the first year of what will be a tech bubble that is going to build over the next 3 to 5 years. It's the only logical outcome when there's a seismic shift like AI is to produce a bubble. And so with all the pros and all the cons, and so that's our setup, that's our framework going into this year. And I think when it comes to performance, the consensus is that the Mag 7 is not going to perform, not going to be leading the market, just given the strength that it had in 23. I agree with that consensus. I think that the substance of the performance is really going to come with that sub $20 billion market cap. And the reason I talked about this seismic shift in AI that's going to be starting to brew, these smaller companies are going to have an impact on that. And prediction that we have at Deepwater is that the Russell 2000 growth is going to outperform the S&P 500 this year. And so we feel great about that. And we have a product that addresses that too with our Deepwater Frontier Tech Innovator Index. And so we're all over this and think that this is going to be a great setup to what is a 3 to 5 year tech bull run.
So presumably we got the first year, the 3 to 5 year bull run in the books.
Yeah, exactly. So he could be talking more about 2 to 4 years. What do I view on that? My view on that is, I think it's potential. I think it's a potential. That would mean, we could call it at least 2 more years of kind of bull rally. If the economy can stay fine, I can definitely see that being a high probability. If the economy's fine in 24 and 25 and maybe even strengthens, I think it's 100% on in regards to that, as long as the economy holds, right? And I think that does roll all the way up until we get the next big recession, which the next big recession we get, that's going to be the one where unemployment's going to go up massively. But that could be several years away, so just do keep that in mind. Everybody expected it this year. Now they're trying to push it off to this year and, blah, blah, blah. Ultimately, that could be a few years away, right? We could kind of be a little bit more in a 2003, 2004 time frame right now, okay? And so, yeah, I think that's pretty realistic to have at least a couple more years of a bull rally in a lot of these big tech stocks up until you hit the next big recession.
If you think it's an AI-animated bubble, at least becoming that down the road, it seems like the market's craving different ways to gain leverage to that trend. I mean, Nvidia doing what it does, the earnings.
And I'm not convinced we'll have a bubble that will brew. I'm not convinced at all in regards to that.
going through the roof. It's added $800 billion to market cap last year alone. Where else are you going to be able to latch on to whatever AI is going to bring the economy?
So I think this dumbbell approach is the right approach. I think you do need still some exposure to these mega caps. I'd put it in the order of Google at the top with Gemini. I think that it's going to get more respect from investors, its impact on Google's positive impact on their search business. Separately, second, I think Apple's going to announce a foundation model in June. This is going to be the first time they're going to be talking some substance around generative AI, and I think that that will be positive. And so that's kind of at the top of the barbell. And then at the bottom of that barbell, I think a couple companies. One is Unity. This is a $20 billion market cap. This company ultimately is building a lot of games today, but it's going to be building spatial environments in the future using artificial intelligence, of course. And Etsy, kind of this forgotten e-commerce company, ultimately they can use AI to help build more creative products, and I think that's going to be a benefit. That's a $10 billion. So we kind of think of it, that barbell approach. One of the couple of the Mag 7 also have the substance in that sub $20 billion market cap.
You know, one thing I've always wondered when you talk about the estimates of all the incremental revenue streams, that whether it's going to be, you know, Alphabet or Nvidia or Microsoft are going to derive from this trend, where's it coming out of? I mean, are there whole companies or subsectors that are going to be net losers in this environment?
Well, I think that there is going to be some industries. I think all of us have potential risk on the information worker side. If you're not embracing these tools, I think that there are going to be some net losers. As far as specific companies that are net losers, I think this is a very similar dynamic as what happened with the shift from to mobile. If you weren't a mobile first company, who are those specific companies? I don't have a list of who the obvious ones who are going to be net losers in this. I think one company that when I think about big companies, massive market caps that are going to be underperforming in the next couple of years, it's Netflix. They really don't have an opportunity. It's not as much about an AI opportunity there, and I think the content play is played itself out. And so I would say it's obviously been dropped. One of the focus companies in 2023. We don't talk about the FANG anymore with Netflix in it, but that's one of the larger companies that we're staying clear of at this point.
And real quick, I know you're kind of a long-term believer in.
Do I think stay clear of Netflix stock, or do I think Netflix stock is a buy? And the answer to that is Netflix stock is a buy. I mean, the stock's always a buy. It's one of those very few companies that it's just always a buy. Just amazing, obviously, what they've done over the past 20 plus years. And so, yeah, Netflix is one of those stocks is always a buy the dip candidate. I wouldn't be surprised if I buy it. I bought some shares in 22, made some good short-term profit, took the money. Wish I would have just held the shares. It's one of those companies like, you can take the profit, but you end up regretting it over time.
And what it's going to mean even beyond cars. But,
I did that with Nvidia as well. I regret it.
Sideways for 3 years. You're going to have a step down in delivery growth. What do you see the setup being right there?
Big day today. We'll get the delivery numbers. The bogey's 475. That gets you to 1.8 million for the year. I think it's above that number. Most importantly is this. Traditional auto has stepped back in terms of what they're investing in EVs and autonomy. That's a mistake. And the first 6 months of the year is going to be challenging for Tesla. I think they're going to have accelerating growth in 2025, and I think they're going to show the wisdom of continuing to embrace this future. And I think that they're going to be massive automotive companies that have been around for 100 years. They're going to be a fraction of their size in 5-10 years from now. We'll start to see that dynamic play itself out beginning in 2025. The market will begin to anticipate it in this year.
Yeah, I mean, I don't even know if I need to talk about how bullish I am on Tesla over the coming years, right? Appreciate you guys joining me as always. Make sure to check out pinned comment down there. Get access to the 45-minute video I recorded for you guys roughly. It's how I plan to invest in 24. You're missing out if you haven't got access to that. It's absolutely free. It is pinned comment down there. Alrighty, folks. Thanks for being subscribed. Much love and have a great day in 24.